Welcome to the Happy Cows Eat Smart podcast, brought to you by Novus AgriScience, where your dairy's business success is our passion. In our monthly podcast, we cover updates and insights within Federal Milk Order 33. Our team of expert ruminant nutritionists delivers research-backed, custom feed solutions tailored to your herd, because we know every farm is unique and no two solutions should ever be the same. We go beyond nutrition. Through robust tracking of herd metrics and financial benchmarking, we help you optimize costs, boost performance, and build profitability so you can focus on what matters: happy cows and a thriving business. So whether you're tuning in from your office or your truck, join us each month for insights, stories, and strategies that promote herd health, farm performance, and dairy success. Let's make your business thrive, one episode at a time. And now, Dr. Lawrence Jones will share his insights for Federal Milk Marketing Order 33.
Thank you, Ben. And I thought I would kind of start with some of the things that I've been talking about here for the last couple of weeks. So in my early June podcast, I said that the dairy markets are sending a fairly strong signal to the dairy industry. And what they're telling them is to keep more cows as feeder prices are going up. And please make more milk because Class 1 prices are very strong. And those are two strong signals. And you see that the Order 33 is kind of following right along. Here's your statistical uniform price for May. It was just a little under $19, so at 20, which is very strong. It's been only higher than that a few times in the past. And if we look at the statistical uniform prices across the nation, they were up 67 cents, with Florida at $25.45. The entire Northeast was over 24, but the lowest is going to be Minnesota, Wisconsin at $17.61, because again, they are very little Class 1 and high Class 3. Class 1 came up $1.49 to $20.15. Now, your exact Class 1 price was $23.95. That's because we add $3.80 as a differential. So again, very strong Class 1 prices. Along with that, we're very much in expansion mode. For April, we had 9,645,000 cows, just a tremendous upward movement of cow numbers. I put together my predictions for May, which are going to come out next Monday, and I'm around 9.651. Now, I think eventually we're going to end up at 9.7. I don't see any other way around that. And slaughter numbers very much support an increased herd. So the last slaughter numbers we had were the 24th of May, 44,500, and that's only about a 24% cull rate. We need to be up around 30 to 32% to have a stable herd size. And when we're calling it that the low of a number, that means that the herd size is just going to continue to grow. Kind of the same thing in your dairy. If you're only having a call rate of 23, 24%, you're definitely going to have an increased herd size. Now, the other thing I did earlier is say that the dairy farms are going to be experiencing this collapsing beef prices, non-fat dry milk, and cheese. That was probably a little premature on beef prices because they were coming down here and then all of a sudden they turned back up. So that was actually a wrong statement on my part. Feeder cattle are up to about 365, and what happened here was the screwworm hit Texas and New Mexico. So that's keeping a lid on the number of cattle around. The Oklahoma National Stockyard is still well over $4.50 for feeder cattle. So looks like keeping cows around to get black calves out of them is probably going to be a profitable thing into the future here. Now, when we look at non-fat dry milk, we were in a supply squeeze, and this thing has just fell out of bed, and it's actually down further today. It just kind of went up. On the National Dairy Sales Report, it did hit 208, but on the spot market, it hit close to 230. But as I always say, high prices cure high prices, and this thing is just coming crumbling down here. And kind of same thing with cheese. We've been on a roller coaster price right here, and it's on a downward trend, and it was down again today on the spot market. And that's being driven by the amount of cheese around. So this is the April cheese production. Again, very long-term trend, and the highest cheese we've ever had was made in April. Now, I've made a statement that as long as we're over 40 million pounds a day, we run the risk of being well under $1.60 for blocks. And here are my projections for the next 12 months. And we never go under 40 million pounds a day. I thought July and August would, but with the increased milk and the increased production in April, that just didn't happen. Luckily, we have been curtailing cheddar cheese production. Again, it was going up and it kind of shifted down here in 2023. So the production that we had in April was more reminiscent of 2021, 2022. And that's what controls our milk price is cheddar cheese. So what's been going on here? We've been increasing a little bit more Italian, a little bit less American, and of course American is made up of a large percentage of cheddar, and that's actually been trending down. And this is a graph I always like to look at coming out of the dairy products report. You know, this appearance was fairly stable, and then it went up, and the difference between those 2 points I think is all due to exports. So let's look at the April export numbers. So they were fairly strong at 11.2, let's call it. But the number that I look at, that I focus on, is what did cheddar cheese get exported at, and that was only $1.75. We can easily say that there's a 30-cent premium, so that says blocks would be like $1.45, and that's right where the spot market is today. However, there is a chance that these $1.75 were booked back in March earlier in the year when cheese was $1.45, but nonetheless, cheese is down to that level today on the spot market. Butter exports actually decreased a little bit, and we're 221, and again, this is 82% butter, whereas generally AA is 80%. Here are our cheese exports per day. They've been very much coming up, and what I did is I said, well, here's the channel that we were historically at, and if we look at the difference between where we are today and where historically we are, it's 1.2 million pounds a day. So if something happens that we increase cheese price so that exports are not overly attractive, then we're going to have to suck up another 1.3 million pounds a day into domestic demand, which is likely not going to happen. This is the graph of the export price, which is in red, and our National Dairy Sales Report, and then the numbers are the percentage of cheese that we actually export. These were on a collision course. Now I think they're going to come apart a little bit here, but whenever we are very, very close, we're going to be down in that 7.5 range as opposed to this 11% range when there's a large differential there. So we just had a global dairy trade earlier in the week here, and that was not overly supportive either because we were down 2.8 session over session, and cheddar cheese came down 7 cents. Now there's very little correlation between the global dairy trade and the export numbers, and part of that is the fact this is actually spread out about a 6-month period, but it looks like by September, October, we're looking at a cheddar cheese world market at $2 or a little under. So let's come back and kind of look at what happened in order 33. Overall, your milk check should have come up about 68 cents when corrected for the different components. And again, the total is much higher than what the statistical uniform price is. So the fat percentage came down 2 ticks, and the price came down about 16 cents. So overall, there was a fairly negative impact due to fat. Fat prices came down 17 cents to $1.70. That is not our low. Our low was back here in January at $1.45. And again, our high was a year ago at $2.85. These look like they're going to kind of settle out here. But butter on the spot market dropped another 4.5 cents today, down to $1.55. So these may trickle down a little bit. Your fat percentage came down about 2 ticks, but it's up 7 ticks from a year ago. And overall, fat was down about 9 ticks across the nation at 428, so you're above the national average. Highest was out here in the Northwest at 439. Texas was on their heels at 438. And New York was actually pretty strong at 436. Protein percentage was about the same but price did come up from 252 up to 275, and that was up about 23 cents. These look like they're coming up, but I have big questions about that. Cheese is under a tremendous amount of pressure. The spot market today on blocks was down to $1.46, so I think this is probably wishful thinking. Protein came up about 8 ticks. You guys are still very strong in protein. This has been going up on the high side of quite a bit here. And across the nation, the Northwest was at 347. Texas was also very strong at 345. And again, you were 335. Other solids more or less don't change in components. Now, it did look like it changed a little bit, but that's probably rounding error. And there really wasn't much change in the price. So other solids were 38 cents. Much higher than the low that we had a year ago at 29 cents. These look like they're trickling up, but again, whey is not performing like we would like it to perform, so I think this could be more flat than upward. Those three together make up class 3. That came up 10 cents overall to $16.92. Again, that directly is not on your milk check. These look like they're headed up, but the market is down another 15 cents today, and I actually think July is going to be into the 15s before we get done here. If we look at the May contract, 6 months out, 6 months ago was right when we had that kind of down period in the end of December there, and so it actually came up 60 cents, but we were low at 16.01 and a high at 18.21, so $2.20 differential between the high and the low of that contract in the last 6 months. Class 4 prices have been strong up until recently. It was up $2.10. That kind of makes up your PPD for class 4 and class 1. That is the high for the year, and I think that will be the high for the year. The low was in January at $13.55, and these are trending down relatively fast here. And again, the PPD was up about 69 cents. That was a combination of class 1 and class 4. All right, so where are we headed here? So one thing that we got to keep an eye on is bird flu. As you know, a little over a year ago, that was fairly significant. There have been 50 farms reported in Idaho, but that just seems to be a non-issue. USDA is not talking about it very much, and the market doesn't seem to be responding to it at all. But this was a fact sheet that StoneX put out. So where are we at? So this was at 11:26 this morning. Again, these are down from where we were here. But we've lost all of our 19s in class 3. This graph is from Friday, actually. I was hoping we'd hold some of these 18s, but we're in jeopardy of losing it. And right now, November is trading at 18 even. So again, we have some downward pressure here. Overall, grains have been somewhat headed down. Soybean meal took off $5.25 a ton. Corn came off $2.25 a ton. Overall, feeder cattle were up about 2 cents for the week. Part of this downward pressure was the WASDE report that came out with the crop production report. The U.S. production was actually expected to be down in beans and a little bit up in corn, which surprised that the market reacted like it did. But I think the issue is the ending stocks going to be up a little bit from where trade thinks it were in 26, 27, but in 25, 26, the end of this year, soybeans are expected to be quite a bit higher than what the trade was. So again, there's been a little bit of downward pressure on these, and so this is a channel of the soybean meal. Historically we've been running between 295 and 325. We're pretty much right in the middle of that right now. I'm going to finish up with weather here. Order 33's picked up a little bit of drought, drier conditions, particularly in northwest Indiana there. Now there's been a lot of discussion about the El Nino, and it's going to be a super El Nino, grand El Nino, whatever you want to call it. That's all this hot water off the South American coast here. But one of the people that I spend a lot of time following is Eric Snodgrass, and he's arguing that we can't really say what the El Nino is going to do. It's more about this cold water up here in the Aleutian Islands, because that's what's going to drive the jet stream as to whether it comes under this and comes more to the east, or if this warms up, it'll go over it and come more to the west. And so that's kind of dictating in the country where we're going to be dry. And so I put in the seasonal precipitation outlook. So it does look like it's going to be drier than normal in Minnesota, Nebraska, eastern, North, and South Dakota there. The monsoon is probably going to be strong here in the Four Corners state, and we should have more moisture in the northeast, but the order 33 should have equal chances of fairly normal precipitation. All right, Ben, that's what I've got for you this week. I apologize for all the negative news on the dairy front, but we've been getting more and more information that these processing plants are looking for more milk. Unfortunately, that is going to drive down prices. All right, back to you.
Thank you, Larry. Novus AgriScience hopes you found this information insightful and look forward to next month's installment.